Hey, this is David Pereira from Rent to Grow Homes, here to review a new rent to own deal we have. This time it's a 2-year deal in London, Ontario. So this family was referred to me by a mortgage broker I've worked with before. And so I've met with this family 3 times now on Zoom. And sometimes you can sort of tell when someone's really learned their lesson. So they went through financial troubles. They were in a consumer proposal. They'll be out of that in a few months. And the question I asked them is how do we make sure you don't fall back into that? Like, what's changed in terms of habits? How do I sort of know that you guys are a safe bet? And I can tell by the reaction from both of them. They just hate the idea of almost spending money now. I think they've learned their lesson on the right way to kind of set money aside, save it, use it for what's necessary, invest. No one had ever taught them that before. And I think going through the consumer proposal was a pretty rude awakening. They've been super diligent in the last few years about getting their finances in order. They do have money coming to them with a sale of a family property that the wife, her siblings, father have equal share of a property that's being sold. So that's going to basically take care of the remaining debt, have some leftover money. And the other thing is we've approved them for a budget of 400 and they're looking at the 350 mark. They would much rather spend less, not be house poor, even though 400K is fine based on their incomes. All that to say is part of my job is to make sure that this is a family I can wholeheartedly recommend to an investor. And each conversation I've had with them, I feel very comfortable. So a bit of background on them. Combined income is 120-ish, 130. She is a cleaner at a local hospital. He is a metal sheet worker about to be unionized, which will bump up salary even further. So they make good income. They also get Canada Child benefits for their 9-year-old son. They live in St. Thomas, looking at the St. Thomas, London area. So we've approved them for a budget of 400K. Most likely they will do a 2-year deal. If they need to extend for a year, they will. So this is probably for an investor who could definitely handle a 3-year term. But we may structure it as a 2-year with the option to add 1 more year. So let's go into the numbers here. So on the right is my usual summary that I do. So the purchase price, this is the max purchase price, 400. Again, once they find a house they like, we're going to try and negotiate down, and we may get as low as 350, 370. And depending on the purchase price, I reset these numbers. So this is kind of not the worst case scenario, but sort of the highest price scenario at a 2-year deal. So if it's 400K today, in 2 years, they would buy back at 441 from the investor. It's a 2-year deal. The initial investment from the investor is 75,575. Each month, the investor will get $500 of cash flow. Cash flow means above and beyond the expenses of mortgage payment, property tax, and insurance, which is a cash-on-cash return of 7.9%. When you look at sort of the deal as a whole, the annualized ROI target is 21%. So total ROI is 42%. Total ROI dollars is 31,742. And of the entire profit pie, the investor is getting just over 2/3, 67.9%. I always try and target deals to be 2/3 for the investor, 1/3 for rent to grow. And in this case, the numbers suit this. So let's go into the numbers in a little more detail here. So purchase price of 400K, we assume the market goes up 5% per year. Now the market's actually gone down or stayed flat in a lot of the outskirts. So the likelihood of a 5% increase has actually grown because the markets have sort of flattened. So the exit price is 441. 80% mortgage, 20% money down. So I've estimated here at 4.5% for a 2-year with a 30-year amortization. We can also do 25 years. It doesn't actually make much difference in the numbers. Cash to bank would be the 20%, which is 80K. Legal is about 2,500. Appraisal is 600. Land transfer tax for 400K is 44.75. I have a fee up front of $3,000. And the tenant buyer has significant skin in the game. They're in for $15,000 up front. So when I kind of sum all these numbers up here, this is the investment for the investor, $75,575. I typically do this at 20% return. That's what I target. But if there's more juice available, then I try and give more to the investor. And in this case, I think I've got it at 21%. So in terms of what happens each month, they are paying rent of $24.50, and they're paying an extra savings amount called the option credit at $625. So they pay the rent on the first of the month. They pay this on the 15th of the month just to help with cash flow. So the inflow each month is $3,075. We pay out the mortgage of $1,621. Insurance, my estimate right now is $250. Property tax estimate's $300. We add these up, it's $2,171. So we have about $904 left each month. As of now, I'm allocating $150 to the investor. $500 to the investor, which is monthly cash flow. $150 I take as a property management fee, and we leave some money in the joint account. Again, these will get adjusted when we have actual numbers, but this is a pretty safe estimate. So let's fast forward to closing in a couple of years. So we said $441 is the set price. We returned their initial deposit of $15K. We return 24 months multiplied by that $625 option credit. Really, that's a forced savings program. And so that totals $15,000. And so now they have basically already deposited $30,000 as their down payment to purchase this home. There's mortgage discharge and legal closing costs. We send back the money to the investor, right? So you get your initial investment back. And this is proceeds from deal at sale. Now let's look at the overall deal profit. So appreciation's $41,000, right? We went from $400K to $441. There was mortgage pay down over 2 years to the tune of just over $10,000. There was some rental cash flow each month. I add these three up, it's $58,000. We subtract our hard costs of legal on the buy side, the land transfer when we bought, and then legal on the sell side. So $94.75 there. And then this came in through a referral. So a referral fee is going to the mortgage broker. So what's left in terms of total profit available is $46,000. Now the investor was in for $75,575. I'm promising 21%, which is a total return of 42%, and the total dollars returned is $31,742. That is the profit. Now, how you're getting that profit is $12K through cash flow for 24 months, 24 times 500. And then the rest come upon the sale of the property, $19,742. In terms of how I make money, there was $3,000 up front. I charged $150 a month for 24 months for property management. And then the majority of my money also comes at the sale time, right, of $84.32. The reason we structure it this way, we're all incented to succeed and get to the end, right? The investor gets most of their money at the end. I get most of my money at the end. And the tenant buyers get a house. We are all incented to get to the finish line. And when we look at the total profit on the deal, total profit available is $46,773. Investors getting $31,700. I'm getting $15,000. And so the split here is the 67.9 to 32, right? So just over 2/3 to the investor. So if this is a deal that seems interesting to you, you like the idea of helping someone earn home ownership, you like the idea of making 21% on your money, get in touch. We can review this deal or other deals I have available. Thanks.